Hello friends, I'm your host Rakesh Kumar. In the previous video we had discussed about the hanging man candlestick pattern. We had observed how to identify the pattern in an ongoing market. Today in this video we will see how to use that identification in order to place our trades and what can we expect as a profit target from the candlestick pattern. Just to remind you that if you have not subscribed to our channel yet, then you can subscribe to it now to get the notifications of the latest video uploads. And if you find this video useful for you, then please consider pressing the like button which is below the video. But before we begin, let us have a look at the risk disclaimer. It states that the futures, stocks and the options trading involve substantial amount of risk. Your capital is at risk, the losses can exceed the investment. The information is provided as is and the user of the information assumes the entire risk of any use it may make or permit to be made. So let's get started. Okay friends, to start with, let us revise something about the hanging man candlestick pattern. Until now we have seen that this is a pattern that forms with a small advance. Now this advance can be a straight advance also, or this can be an advance from a downtrend also. Now my intention to draw this figure here is that when there is a downtrend, where can we expect the hanging man candlestick to form? Friends, the hanging man can form here. It can also form here and it can also form here. Now what is the difference what type of hanging man pattern is actually? The answer is that a hanging man pattern is like a typical T. Okay, this is how it looks like. Yes, this is how it looks like. It looks like a T. You will not believe, but I will show you that it actually looks like a T. Okay, it looks like a T here. Now what does this T show you? That there was an opening here and closing also at the same price. The price went down, sellers pushed the price down, but eventually buyers pushed the price up again. And this, if it is forming at a resistance area, which is this one, that is indicating that now sellers are actually trying to take control of the market, but they could not take control of the market because the pattern or the candle closed higher. So what do we need to confirm that the selling has started? The thing that we need to confirm is that the next day, that is the following day, the candle should be red and it should break the low of this candle. That is how we will know that now there are no more buyers, or those who had started buying at the low of this candle, now they have the stop loss triggered and the price is now going to go south. Okay, and why I'm expecting this to come here? Because if the same pattern forms here, then I will not call them the hanging man. If that pattern is of that candlestick is formed at these places, then that will be called a bullish pin bar, because whatever happens at support, when something like that happens at support, at that time it is bullish in nature. So from support we will buy and from resistance we will sell. And since it is a downtrend, so looking for a hanging man pattern in a downtrend is a very good, because you will be ending in a bigger trend from this resistance area. I don't want to confuse you, so I will just remove these one which I kept at support, and let us go to the example straight away. So here you see this was an uptrend here. This this was an uptrend here, and at this place, okay, I'll just remove this one also. Let us see if we are looking at the right place or not. Okay, later. First you see that after an uptrend, after an advance in an uptrend, there was some selling pressure which was observed on this candle, but it closed as doji because it also has a higher wick on the higher side also. But this particular candle, which gives us the clean picture of the hanging man candlestick, it gives us a small red body, a small upper shadow, and a long lower shadow. That means after opening this market, the sellers pushed the price low, but the buyers eventually came in to push the prices high, but they eventually failed and the price closed at the same place from where it opened, or slightly less than that in this case. Even if this candle would have been green, then also it would have been a hanging man candle pattern, hanging man candlestick pattern. Now this candle as such alone is nothing. And now I also want to reiterate that this candle is here and the same type of candlestick is also here. Can you tell me what is the difference between the two? Okay, I will mention the difference because you cannot interact with me in the recorded video. In this case, the next candle was a green candle, but in this case the next candle was a red candle. So this is our confirmation. So this is a two candles candlestick formation. The single candle is only an alert, the next candle is a confirmation that now the price is going to go south. I hope now you are clear that when a hanging man forms at a resistance, if the next day or next to next day is a selling market, then only we are sure that the candle is confirmed, the pattern is confirmed, and the price is going to go south. Now if after 2 to 3 days or maybe even the next day the candle closes higher than the high of this hanging man, then this setup is ruined. That means that pattern has now damaged. We cannot trade this. It is a failed pattern. Okay, let us go to the another example of the euro dollar here. In this case you see that there was a previous resistance. In this case you see this was a previous resistance here, and after this small advance, what happened here? The price went down south and eventually closed at almost near the open price. Now this is okay, but now you see the next day there was a selling and the price closed lower, although it did not break the low of this candle. That's why I said that after 2 to 3 days, if the low of this candle is broken, that means the pattern is confirmed. Till now, till this place, this pattern is confirmed at this candle. You see, this is the hanging man. The next day there was a selling, the next day this was an inside bar, this was the mother bar, the inside bar, and then after it broke to the low side. Now that is when we enter the sell trade, and our stop loss should be always higher than this hanging man candlestick high. Okay, this will not be our stop loss. Our stop loss will be this one, but we will enter the trade after this break. Okay, after this low is broken. So in this case we enter at this particular candle. Our stop loss will be with this one, and our take profit target. Okay, I'm sorry, I forgot to mention that this is a candlestick pattern where we cannot measure the targets. We cannot measure the potential targets, but we can just see where was the potential support earlier, and based on that we can keep our targets. So this was a support zone here. We can see if in this case this is the entry point and this is the stop loss. We have almost 107 to 110 105 points as a stop loss, so we are expecting 315 points as the take profit. 315 points come somewhere like this, so it's a good 1:3 risk to reward ratio, and we are very comfortable entering this trade. So very well, you won this trade. Okay, now the last example is the euro versus the PLN. Now here you see that the advance was good. Okay, there was good advance. So you see there was a good advance in the price. My god, here also there is a hanging man, and here also there is a hanging man, but we will discuss this one. We will discuss this hanging man here. Okay, what is happening here is that the price is advancing, and then suddenly forms a pattern candlestick which alerts me that this may be a hanging man, because if it would have been a bullish pin bar, it would have come at a support region. I'll just give you one example. Now if this candlestick forms here, then it is a hanging man. Okay, then it's a hanging man. And if this one forms here, then it's a bullish pin bar. So you have understood that what I'm trying to say. Since this one is this nature, so this is a hanging man, but this is not confirmed until and unless we break below the low of this candle, and the very next day we broke below the low of this candle, and we will trade this depending upon the situation where is the support. Now if the support region here is this area, this is the support area, and if we sell this market, then our potential stop loss will be somewhere here, and we will enter somewhere here. So our risk to reward we have to identify. Our risk to reward ratio should be 3 times. So 338 points is my stop loss, so I'm expecting almost 1000 points as my take profit. So I will go in the back side and see if I am going to get almost 1000 points. Yes, there is a potential of the trade to move almost 1100 points. So I'll just blindly take this trade with my stop loss above the high of this hanging man and potential take profit here. So this is how you trade the hanging man candlestick pattern. Now before I end this video with these 3 examples, I just want to mention here once again that you do not confuse yourself with the bullish pin bar and the hanging man. A hanging man is the one that occurs at a resistance, whereas the bullish pin bar is the one which occurs at a support region. So when the same pattern or the same candle comes here, it becomes a bullish pin bar. You see? So more on this these differences and how to trade them differently, I'll explain in another video. And before I finish this one, I wanted to tell you or give you a piece of advice that whenever you open a trade, you first manage your risk. If you do not get 1:3 risk to reward ratio, at least there is a potential 1:3 risk to reward ratio, then only you go and open the trade, and you adjust your position size in such a way that if your stop loss gets triggered or if your plan fails, then you should not lose more than 1% of whatever is there in your equity. So that is the bottom line. That will make you a consistently profitable trader in the long run. With this note, I shall end this video. Thank you very much for watching.